Okay, this is going to be a video on the London session, right? Now, this is going to be the part of the mentorship where we start to discuss the actual sessions within intraday and how to piece together the sessions and what to expect from the sessions because you can't have a solid trading day without expecting what price should do, right? Because essentially you want to trade based off your expectations. It's not like you want to act on impulse throughout the day whilst you're trading. And what's going to help you guys do that is know when the low and the high of the day is going to be placed in. So backtracking to a few videos ago, a few lessons ago, I got you to do a homework to do with the days of the week. So we had essentially this candle, right? This candle, and we said that this was a weekly candle. And we have for every single candle, it's true that we have a open, low, high, and a close. And the homework that I gave you guys was for every single bullish and bearish week from the time frame I gave you, make a note of what day made the low and the high for every bullish and bearish week. And if you saw that video and you done the homework, you'd know that early on in the so for a bullish week, early on in the week, we place in the low, and then the middle and the end of the week, we like to expand and make the range. The same is true for every candle. Now, we care about the day, right? Because if you know, right, that this day is going to trade bullishly, essentially what you need to do is get as close as you can here and reap all the profit from this expansionary move up, right? So, how can you get close to this low? Well, you need to have a good bias because none of this is going to work if you can't distinguish if it's going to be a more likely to be a bullish or bearish day, right? Now, where is the low of the day likely to be? Using the same framework and same logic of the weekly expansion, how the low of you know, the opposite end of the range is going to be done early on in the week. It's true for the intraday as well. London session, right? It is on my time, New York time. Everyone should have the time to New York now. I know a lot of us live in the UK, but for trading view and trading purposes, put your time to New York because every reference I'm going to give is going to be with reference to New York time. So if I'm saying a specific time and you're in UK time and you're trying to use your UK time, it's not going to work, right? So 2 a.m. to 5 a.m. New York time, this is called the London Open session. And this is one of the sessions we look to trade, right? Now, the London session. Why is the London session so significant? The London session is a extremely volatile time for the market. When London session starts, there is an injection of liquidity within the market, right? For example, you see the low of the day is placed in today, right? The low of the day was placed in at London, right? You see this move down here, right? A move of around, so this is around 6.9, 6 7, so it done nearly 30 pips, right? So this one move here, it done nearly 30 pips here. Now, London is gonna offer you volatility, and it's one of the sessions that I like to trade. Now, essentially, the job of London and what we like London to do is something called a Judas swing. Now, what is the Judas swing? Judas means false, right? So, for example, Christians believe that Judas is the one that gave up Jesus, or a Judas goat, right? If you don't know what Judas goat is, it's essentially the goat that leads all the sheep into the slaughterhouse, tricking them to get slaughtered because sheep follow the herd. So the Judas goat leads them to get slaughtered. That's what London Session is built in to do. And this is when we like to trade. When London is going against your bias, this is good. Why? Because as a day trader, you want to get as low as you can to buy, right? You don't want to buy here or the middle. You preferably want to buy in the wick, right? You want to buy somewhere here. You want to buy here as close to the low as possible and take profits anywhere in the expansion. That is what London and the Judas swing will allow you to do. London is going to offer usually a protractionary move. Now, if you've done the homework that I gave last lesson, you should see that the low or the opposite end of the range meaning the low on a bullish day and the high of a bearish day is usually placed in from midnight to the end of London session. This is the job of London. To place in the opposite end of the range, this is what we like to see. We like to see London go against the trend. Now, the question everyone's asking and thinking, but Omar, how low do we know it's going to go? In the next lesson, I'm going to give you one tool that is very, very accurate. There's specific parameters when you can use a tool and when you can't use a tool. And this tool that I'm going to show in the next lesson, we are going to share this one as well, just at Weekly Commentary 9. In this lesson, just for time's sake and to keep everything short and sweet and to the point, because I really want you guys to focus and not lose track in the sessions, because this is the crux of trading here. This is what's going to help you guys trade. So every single day, I make a note of this. The time that we like to use is midnight New York. Midnight New York is when the algorithm resets. This is called IPDA true day, right? The price deliveries algorithm's true day starts at New York midnight. Now, why is this important? I'm going to show you guys why this is important. This is the midnight opening price here. So let's just take this up. And let's label this New York midnight. Let's just use midnight. How long and how low does the price stay below this midnight price? It doesn't stay below the midnight price for long, does it? When you are bullish, and really take note of this, and we're going to add more precision into this, and this is where your price arrays are going to come and add accuracy into your trading. When you are bullish and you look to trade the London session specifically, you wait for a run below the midnight price. This is your true overbought and oversold for London. The best sells come from under London. Now, it doesn't mean that when price trades above London, the midnight price again, I can't get a trade. That's not what I'm saying. I'm saying the protraction, right? You see that Judas swing. You want to see that Judas swing below the midnight. Where below the midnight though? This on a higher time frame, 15 I think or 30, this is a fair value gap. You preferably want to see the Judas swing into a price array, and you always want to see a run on liquidity. For example, here and this low as well. This low was run out, right? In addition to midnight New York price, this box I have here, this is called the Asian range. The times for the Asian range is New York time, 8 p.m. to midnight. Now, we have specific criteria for when we use the Asian range to frame our setups for London. You want to see the Asian range in an actual range, right? You see how it's not trending, right? Because Asia can trend, right? Asia can do a move like something like from here to here and it will be trending. You see how Asia is, this is around like a 20 pip box, right? Yeah, it's like a 20 pip box. You see how is this going in and out, this right here, yeah, it's consolidating. This is something that we want to have framed for London. And when I go into the best buy and sells, right, in chapter 4, we're going to use everything that we're learning and we're going to frame what the best buys and sell setups are. This right here has a low and a high. You want to see Asian range low be swept in the protraction of London. So now we have two measurements we can use to measure the protraction of London's Judah swing. We have the midnight opening price, and we have, in conjunction to that, the Asian range. Sweep midnight. So that answers one of the questions. Where under the midnight price can price go to? Well, look at your Asian range, right? The Asian range low should be something that you look to sweep when looking to buy in a bullish day for London, right? So you see how we swept this low of the Asian range and is below the midnight New York. The low was made and then we trend higher. This is one of the ways you measure protraction of London. Now, the next video, I'm gonna give you guys a tool, right? This tool is called the CBDR, Central Banks Dealers Range. And this, right, this is something that is gonna bring serious accuracy to your London sessions. Now for the New York, I'm gonna give you guys something called the flout. I shouldn't be giving you guys the flout, but there's not a lot of people in this mentorship, and I'm gonna give you the flout, right? So essentially, the CBDR, right, is gonna give you the low of the day on a bullish day, and the flout is a projection of the high of the day on a bullish day. So essentially, both ends of the range. They don't always work. There's specific parameters you need to use for them to work. The flout is very in depth, and a lot of you may not get it. The CBDR is a lot easier to use, right? Essentially, we have many gauges of where London Judah swing is going to be. Below midnight New York price is a must. If it's not going below midnight's price, it's not a high quality setup. You don't want to take it. You always want to see it go below midnight price. When it's below New York midnight's price, this is when you're interested. Now, using your arrays, right, and your knowledge of liquidity, that before we go higher, you want to see it, you know, remove sell side, pair shorts underneath sell side liquidity to go long. Because under sell side liquidity from the market making video, chapter 3, lesson 1, where the smart money buys. Smart money buys beneath lows. They use retail shorts to pair their smart money long positions. Read and smart money like to accumulate their longs beneath the midnight price. We use the Asian range, right, to gauge where the Judah swing beneath midnight price can go to. In addition to the Asian range, you can use your knowledge of chapter 2's price arrays to see that is there a price array from yesterday, or is there a low from yesterday that the London's protraction Judah swing can trade into to form the low of the day. Where is the logical low of the day to be formed? Is there a 1 hour fair value gap from yesterday, an order block? Is there any discount array that we can trade into, right? Using, so when I mean discount range, I mean, so this is Tuesday's, right? This is Tuesday's price action. From Tuesday's low to high, is there any discount array that exists? Well, yes, there's this fair value gap. there's this breaker block here that is a discount in the previous day, right? This is how you start to frame and have your narrative for where is the likely low or opposite end of the range likely to be formed. Now, if I remove this and we go into another day, so this day was sideways. The days that we liked for London to make the protraction is when we have a clear bias for a bullish or bearish day. When the day has a clear draw to one side, you are expecting that opposite end of the range to be made very clearly. When the day is anticipated to be a consolidation, and when can you anticipate a consolidation? When the daily candles they're not drawing to their their liquidity pools, when they're just going back and forth on the daily chart. When there is no clear drawn liquidity, price will consolidate. Like right now in the DXY, we're just consolidating at the equilibrium of the range from the weekly commentary. However, let's go into this day, and I'm going to use the replay bar to get rid of this. Perfect. Now, if I do the same thing, right, get rid of this. Let me just get rid of this. If I do this again, right, so this is the opening, and this is the close. Let's make this red for bearish. This is the high of the day and the low of the day. Again, right? Let's just do this again. So we have our Asian range, and we have our midnight New York opening price, right? Now, this is the anatomy for this day, right? Look, the opening, the high, the low, and the close. The daily. And how was this daily candle formed? What do you see? The same phenomenon happening again. The high of the day made relatively fast. This was made actually in the end of the London open kill zone. The high of the day was made fast, and the high of the day swept Asia's liquidity, and it's above the midnight opening price. This is how I want you guys to start framing London and anticipating where London is going to, because this move in London, it throws off many traders. It it is built in to trick retail to go long, because the retail think that when they see this, yes, we're gonna go higher, and look, retracement, retracement, and people think it's gonna come back into here, and it's gonna go off. You need to be aware of the role of the session you are in. London is gonna do either a protraction, or London will likely to consolidate, right? Now, the session, right? And please listen to this. The session, the role of the session is dependent on what the previous session done. If Asia is consolidating, London will do this, right? Or London will expand, given that Asia done a stop run, right? Whatever the session before didn't do, that the next session will fill in that role. If Asia expanded, London should consolidate because after expansion, there's always consolidation. Now we see that Asia consolidated, right? Look, it's just going across, right? It's not trending, going up, going down, like it's not doing a move like this, right? So what do we expect London to do? London is gonna then Judas. This is when you're knocking probabilities off the table. Asian range is ranged. Okay, London. What is the day likely to do? What is my draw on liquidity on the higher time frame? Bearish. I'm looking for lower prices. London is running up. We're removing the Asian range liquidity of the high. We're above the midnight New York price, so we're overbought right now for the day. What is this looking like? London Judas, right? Preferably you want to see London trade into a higher time frame PDA and then reject off, or for it to simply run stops. Preferably I like to see it trade into some sort of either a previous 4 hour high and remove the liquidity of the 4 hour high, previous day's high, or into some sort of high time frame PDA like a fair value gap mitigation block or any price array from chapter 2. The, the point of this video is London, preferably we like to see it Judas. We like to see it put in the opposite end of the range. And it fits the narrative of the entire mentorship that we'll be teaching as of chapter 3. For the candles that we look at the higher time frame, the weekly and the daily, the opposite end of the range is always made in first. Of course, we need a measure of where is the high or the low likely to be made. For this lesson, I've given you the Asian range and I've given you midnight New York. Using the Asian range and the midnight New York, you can then have a gauge for where is London likely to trade above. And you hunt for London setups above midnight New York. And a good way to know that you're actually in for a bearish day, and what I like to do is if you sit out London or you sit out a bit of it, right, like the first hour, and you see that you're trading mostly above, right? You see that you're trading above of it, and then there's a clear move below it, like here. And look, you see how we're not going back above the midnight. In when we're in New York, we're not going above the midnight again. It shows that they're going to keep prices. The central bank is keeping price lower. It has no reason. They have no reason to push price again above the midnight New York. So it shows that yes, London was actually a Judas. The next lesson I'm going to give you guys a CBDR. It's not going to be a long video. You're going to have homework for it. And it's going to give you greater accuracy on where the actual high is, right? For now, I want you guys to use the Asian range, midnight New York, and your knowledge of higher time frame price arrays to form where the likely high is going to be made. If you're hovering, right? If you're just hovering like this, let's say for theory's sake, that this is just hovering above, below, right? This is trading just below a high time frame array. You want to see the Judas into the high time frame array, or if there's equal highs or it's a liquidity pool that is just screaming to be taken out, you want to see the Judas do that. The Judas is gonna fill in that role of taking traders the wrong way, tag into your high time frame point of interest, and react off that. So that's it for this video on the London session. This anatomy is very important. If you know the anatomy of how the day trades, you are going to be in line with the price delivery. I know in the mentorship, right, it might not seem like, oh, this is getting dry now. It's not that it's getting dry. It's you guys have been with me for so long that this is normal to you now. Let me tell you something. Retail traders don't even consider that every single day there is a high and a low of the day. They don't even consider that. They don't consider weekly high, weekly low. They don't even consider the time of day that's likely to be made. They know the sessions and that there's liquidity within the sessions, but they don't know the role of the session. And this is where your edge comes in over retail. You understand price delivery. You understand the role of the London session now. That is going to place in the opposite end of the range. And I'm going to teach you what New York does, and you can guess what New York does based off this video. But if London makes the opposite end of the range, New York is just going to fill in that role that the Tuesday, Wednesday, Thursday fills in for the weekly expansion. But there's going to be more to it, right? So that's it for this video. Use this as your gauges, Asian range and midnight New York, for where London's protraction is likely to go, right? So that's it for this video. You're going to get homework on the next video, not this one. So until then, and I'll see you guys later.